What is going on, guys? Tempo Trades. In today's video, we are going to go over my favorite liquidity levels, what make them powerful, and what has actually enabled me to get some pretty big payouts. I post these payouts on my Twitter, and here's just an example of one of them, a $17,000 payout from Bullknock. So liquidity sweeps definitely changed my life. I've traded many different models, and nothing has been this consistent. So let's get into it. All right, coming in at number 5, we have the New York AM high and low. Pretty much my least favorite out of the valid ones, but it is still valid. The reason it's my least favorite is just because normally with this one, you're going to have to trade it in the PM session. And basically, if we just go on a chart for an example, all you're going to do is you're going to wait for the morning session to finish from 9:30 to 11 a.m. New York time. And then you're going to set your low and then your high, right? You could just mark those as levels. And essentially all you're doing is you're waiting for, you know, one of these levels to sweep, and you're looking for that IFEG setup. Okay, and the reason this works is just because there's a lot of liquidity engineered there. This is the most volume and the most participants you're going to see in the market. The New York Open, that New York morning window, when the New York Stock Exchange opens. So when it creates that high and when it creates that low, you can bet there's some liquidity engineered there. Coming in at number 4, we have our 1 hour and 4 hour highs and lows. This is probably the most common liquidity sweep that we see. We get these every single day. And I probably take the most trades with these sweeps, and you're pretty much just waiting for the swing highs on the higher time frame. Like I can show you right here, if we just kind of zoom out, here are your swing highs and swing lows, and I'll also go over really quickly what constitutes as a swing high and swing low. I'm just looking for a 3-candle pattern, right? So for the low, it is the lowest point in a set of 3 candles, whereas this is candle 1, this is candle 2, this is candle 3, this is the lowest candle. That makes it the swing low. You understand? So another example is this is not a swing low, right? Because the candle to the left of it, this is lower than that candle, meaning this candle is not the swing low. So hopefully that makes sense, and vice versa for the top side. But all we're doing is we're waiting for 1 hour and 4 hour swing lows. 4 hours are a little bit better than the 1 hour, obviously, because they're a higher time frame. They have more liquidity engineered there. This is a perfect example of a 4 hour swing low. You could see here's candle 1, here's candle 2, here's candle 3. This is the lowest candle in that 3 set. Here would be your swing low. So you'd essentially just wait for price to come down, sweep that 4 hour low, and then you're looking for a reversal out of the gap. But yeah, really good level. You see it pretty much every day, and I mark these out on the higher time frame. So that is coming in at number 4. All right, next up we have previous day high and previous day low. And like I mentioned before, the 4 hour is better than the 1 hour because there's more liquidity engineered, and that same exact principle applies with the previous day high and low, because now it's a daily candle. We're sweeping the daily candle. So again, another thing that you can do when you come into the market open every morning is like, okay, you see Friday, for example, right? Here's the high of Friday, and then the low is down here. That would be the London low. So essentially, coming into Monday, you'd be like, okay, where's the previous day high? Where's the previous day low? And then once this level sweeps, that is a major liquidity sweep, and you're looking for that reversal. Unfortunately, on this day, we didn't get it because we're just trending at all-time highs. But if you go and back test and you mark out these previous day highs and previous day lows of the previous candle in the previous session, it is very powerful. All right, coming in at number 2, this is my bread and butter, the overnight high and overnight low. So just like I said with the 1 hour and 4 hour sweeps, these do also happen pretty much every day. Today is a really bad example as I'm recording this because we're just in a trend market. But essentially, you have your Asia and London session, and with ICT, there are kill zones. So Asia, I have 8 p.m. to midnight, I believe, yes. And then New York is 2 to 5 a.m. That is New York time. Now, again, in those sessions, specifically not really in America, but like overseas where people trade in different time zones, you're going to see a lot of their liquidity engineered here. And again, you mark out the high, you mark out the low, and you pretty much just wait for the New York window, and you can get really good trades off of that. Here's an example. You know, this is at 10 a.m. in the New York session. We swept Asia low, waiting for that reversal, and you see a move to the upside. I trade this every single week, and I can't even tell you how much money I've made off of this sweep specifically. It's going to have a 70 to 80% win rate. You can backtest that and see it for yourself. I'm trying to find, here's another one, a little London sweep. That's a nice base hit. Trying to find one more example. Here's a really nice one. You can see here, we come up, sweep that London high. We're looking for that reversal at that key level, and boom, shorts all the way to the downside. So this is my number 2 favorite liquidity sweep, 70 to 80% win rate on this one. And last but not least, we have the data high and the data low. This is going to be an 85 to 90% win rate. Yes, 85 to 90% win rate. I guess the only problem with the data wick trades are they don't happen every day. They don't even happen every week. You know, sometimes you'll get 1 a week, sometimes you get 2 a week, sometimes you get 0. So these happen the least out of everything on the list. But boy, when I tell you, if they happen, they work like a charm. I'll bring this up one more time. Essentially, it's very simple. You're going to have news. You're going to have news every single week, and we're specifically looking for the red folder news, right? Go to Forex Factory. You're looking for the red folder news for the United States, and in certain aspects of news, like for certain situations like CPI, PPI, NFP, those are the 3 big ones, we are going to create a data wick when the news drops, just like this on screen. And all you're doing is you're waiting for price to sweep out 1 wick, and then the algorithm, we're expecting price to reverse and go target that other wick. Guys, when I tell you this thing is as consistent as trading is, it is insane. I'll try to find an example. Here was one example. Even though the bottom wick didn't sweep in this example, I took this trade last week and I got a 60-point short out of it. So the data wicks are absolutely amazing. They don't show up very often, but you really need to take advantage because it's almost a free win, because as traders, we're playing probabilities. It's going to win way more than it's going to lose. Here's another example of a trade I took with the data wick setup. And yeah, so those are my 5 favorite liquidity levels. And again, I'll just go over this one more time. Data wicks, the best, doesn't happen that often. Overnight high and low, these happen pretty much every day. These are the most consistent and overall the best. If we're just talking about efficiency and stuff like that, these are going to be your bread and butter. We have previous day high and low, very good. Very strong liquidity level, but we don't get this every single day. We have the 1 hour and 4 hour high and low. Happens every single day, but not as consistent as some of the ones higher up on the list. And then we have my least favorite, the New York AM high and low. This is mainly for PM traders. I usually don't take this setup, but I put it on here. All right, guys, and that's all I got. Those are my favorite liquidity levels. Hopefully you enjoyed this video. If you have any questions, please leave a comment down below. I'll see you on the next one. Peace.